And we're live. It is a power pack, the power pair right here, Karan and myself. We've done this before. We've been here before, Karan, and it's always fun
Of course.
talking.
Yeah.
It's always fun talking with you, regardless of how many other people are with us. But anyways, I was thinking we could probably do some more questions this time around. And trying to get more your guys' questions in the chat. So be sure to let us know what you guys want to talk about. But before we dive in, remember just to check out all the stuff in the description below, like, comment, subscribe, all that great stuff. Got our discount links to ShareSite and Seeking Alpha. Using those would not only get you access to their premium subscriptions, but also go a long way towards helping the channel. So we appreciate that. Anyways, Karan, you were just telling me before the show, and before we talk about anything else, you were just telling me that you sold out of Pershing Square, the main fund, which I know has been a substantial holding for you for a while. So I got to learn more. Why sell out of Bill Ackman's prized fund?
Are you still in it? Is it still your largest holding? I think at one point it was your largest holding.
You're cutting out of it.
At one point it was your largest holding, wasn't it?
Yeah, I think it's going back and forth between first and second because of all the volatility right now. But yeah, it's definitely one of my top three.
What's the second?
Stocks.
What's the second one? I mean, it's pushing and then?
I think you're asking me what are my top three holdings. You're pretty choppy right now, Karan. My top three would be Turtle Beach, Pershing Square, and actually, let me double check because there's been some movements I've been adding. Foot Locker might be number 3. I don't think it is. Let's see here. I'll pull up the chart right now. Share screen. All right, let's see what we're working with. Here's my stock portfolio.
Oh, wow.
Wait, whoa, that is not correct. Hold on a second. Let me fix that.
It's a sunscreen photo that convinced you, isn't it?
Yeah, I don't know what happened there. Fat finger or something. Oh no, that's on Google, I think. It thinks that the share price is $5,000 a share right now. Yeah. So I don't know what's going on. Like, look right here. It says $5,000 a share, and that's like the auto Google one. So I don't know what is going on.
150,000 in Facebook. Sweet.
Yeah. So what is I think they're like 180 something right now. I'll just do 185 for this example.
Is it? It's again back down. 175.
Wow, really?
Yeah.
It kept dropping. All right. I'll do 175 then. That was pretty jarring to see that. But here you go.
No, I didn't think I'd see Facebook below the pandemic, like around the pandemic levels again, like March 2020 levels.
I'm definitely interested under 180, and that's where I've been adding over the last few months. So here you go. Turtle Beach, Pershing Square, and actually Equity Commonwealth's back up there. I think Foot Locker got pretty close for a second, but Equity Commonwealth is really just cash. So that's...
Yeah. Did you watch that recent interview by Sam Zell where he's like, "I'm not finding as much in real estate"?
Yeah, which is not a bad take. It's just especially in commercial, but really just any real estate. Cap rates in a lot of places right now are below interest rates that you can get for financing, which is not a recipe for success unless you're expecting some serious rent growth. But how much rent growth could you possibly expect? And you're putting yourself in a risky position when you do that. So yeah, I guess I'm not surprised that he said that because I have the same feeling.
I mean, yeah, but the kind of deals that he's cutting are very specific to him. So the whole generational business and everything, it's not something us as retail investors do have access to, right? So,
not necessarily, I guess, but I think you tweeted something recently, I think, to that quote. And I replied, like, even I was looking at a laundromat recently, just like looking for yield, and you can get just looking at in general like a small business that could be potentially a better route if you're trying to get a decent cash flow yield. But obviously, it's going to
Good
be more
cash flow.
active, so it really depends on what you're going for. But yeah, I was doing a little bit of research into the world of laundromats recently, just to kind of learn what it's all about, and it's kind of surprising how much cash those things can throw off if you're willing to own a laundromat. But
Inflation's
anyways,
got us doing crazy things, right?
yeah,
Like,
seriously, just inflation, rising rates, just looking for something that can not only throw off cash but isn't super vulnerable to like a huge recession. At least you would think. But yeah, it does have people doing wild things, certainly different things than maybe before.
I think so many people are shocked by how interest rates have impacted certain companies as well as they have. I think people just don't get that tech companies, the cash flows are like expected to come off much later. So when the discount rate increases, the value falls. Like it's 101 kind of, isn't it? But
Yeah,
just
it's
caught
weird.
people by surprise.
Yeah, because like you cut out for a moment there, but I think you're referring to how some stocks are more vulnerable to rate movements, like a growthier stock. And yeah, people are certainly in for the rude awakening, I guess. You could say a similar thing about a lot of real estate too. At least the stuff that's selling at like a 4 cap. When you have rates now in the U.S. at least above 5% in many cases. I just got a quote for a mortgage at 5.5% for fixed for 30 years, which is still like pretty great if you ask me. But compared to just a year ago when I got a 2.99% loan fixed for 30 years, like that's a pretty significant jump when you're talking about really low cap rates. And that eliminates a lot of that margin the already small margin that was there in many cases. And that's just not a recipe for success. If you're not giving yourself enough room, which a lot of people aren't. So yeah,
5.5 is pretty much in line with the long-term rates. Right? So 5. That's where long-term rates are at around 4 to 5%.
What do you mean? What's
I mean the long term, like so over 90 years, if you look at
sure, like historical rates.
Historical rates, yeah. So
yeah. I've always heard 7% is being like normalized. Like if 7% was but I think it's kind of arbitrary. It really depends on what governments want to do at this point, with central banks and all the manipulations there.
Yeah.
Does inflation have you doing any crazy things, Karan? We'll get back to your Pershing Square decision in a second, but
yes, that is exactly the same thing with Pershing Square. So a lot of the companies that Eckman is kind of invested in, interested in, are what we call GARP companies at a reasonable price. And am I cutting off?
Yeah, you said great what at a reasonable price?
So growth at a reasonable price.
So growth at a reasonable price. Yeah,
Yeah.
you're very choppy today, Karan. I hope the people aren't getting too angry.
Yeah. Is that up now or still bad?
We'll see. It's all right.
Okay. So we've got Eckman invested in a lot of companies that have more rich valuations in a way. And the only reason his portfolio is kind of being saved in a way is because of the interest rate hedge that he has with the swaptions and everything.
The active stuff.
The active stuff, yeah. And I get it. That's the whole point of a hedge fund, where like one position offsets another position.
Right.
But it doesn't fit in my portfolio as such. I was looking for something with more downside protection. So that's pretty much the role that Pershing Square had in the portfolio. And I kind of replaced that with Berkshire, which is something I should have done a long time back. I think it was a mistake, probably in hindsight, but one that I didn't want to continue. So then I just replaced it now, and I'm like, okay, let's see how it goes.
So it's that. So are you suggesting that you don't like that there's almost like a limited upside because of the cost to implement hedges and that sort of stuff, or is there something in particular?
It's not even flat. So I want something that's neutral at this point, where it's not too impacted by everything that's going on. Something that's kind of like able to go through whatever scenario. Because obviously, I've got a heavy weighting towards Chinese tech, and that's kind of where a lot of the returns come from and have been coming from recently. So yeah, kind of something to balance of that.
So if you want something that can weather a storm, how about Pershing Square Tontine Holdings, the SPAC? It's just sitting there in cash. Why not? Are you moving that to cash, or are you moving it to a different position? Your Pershing Square
Into Berkshire.
so you rolled it into Berkshire, which is
a
lot of cash.
Exactly. Yeah.
Interesting. So it's like, more of just a risk off totally approach.
Completely,
I mean, not totally risk off, but reducing risk a bit is how you see it.
It is, yeah. It is a little bit of that. So balancing the downside that's there. Just replace this with this. Yeah.
Is any of it Bill Eckman himself?
What do you mean?
Do you have a problem with how Bill Eckman manages or carries himself, or anything like that?
I think he's. I mean, his record speaks for himself. So no complaints. No complaints.
You can have complaints. You can have complaints, but still overall support him. I think we all agree he has plenty of flaws, but so does everyone, I guess.
So and like even the loss that was there on Netflix, yeah, it's a huge loss, but it's not like something that would completely wipe him out at all. So
no, sure, yeah, but even beyond Netflix, just I always joke about his PR. Horrendous mismanagement of his PR game.
Is coming.
He just can't keep his mouth shut when he just should, or give very politically correct answers like Warren Buffett. Buffett gets tossed some pretty controversial questions sometimes, and he always kind of shrugs them off and says something very milk toast. So you should take a note out of that book.
Yeah, even with Berkshire, so when you look at Berkshire, you've got 4 strong companies, 4 pillars, as he calls it. So you've got Apple
companies, Apple.
Yeah, Apple, the railroads, the BNSF. He's got Geico, the insurance business, and what was the last one?
Cash.
No, not Cash. I'm blanking.
Not.
But yeah.
Well, he's the energy business, or
the energy business, Pathway Energy, right?
Mm-hmm.
So those are kind of the 4 pillars, and then surrounded by that, you've got the entire investment portfolio and the private businesses, and a lot of those have pricing power. So I think they could weather whatever's coming better than what Eckman's invested in. If you look at Hilton or Chipotle or
that's fair enough. So you're getting choppy again. Are you able to reduce your video resolution? Maybe that would probably help. Because your audio is mostly coming through, even when your picture stops. But
is it better?
We'll see. It needs a second, but yeah, we'll see how it goes. But yeah, that is a good point on Berkshire, in that it's kind of. It's like I don't want to say a 4-legged chair, but it has a really nice foundation to where it can kind of, I don't want to say it can handle anything, but it is in a good position to handle a lot of situations. And then you have lots of cash, so you have liquidity for whatever you want to do, and not only for investing aggressively, but also to help companies or help your actual businesses. You have plenty of quality companies in there for growth. And a lot of those quality companies themselves might be able to weather a storm better than maybe your average whatever company that's not as well capitalized. And it's very diversified as well at that. So even if a few, it's relatively diversified because half the investment portfolio is Apple. But even if one of those legs falls out, you have quite a few others to stand on, which is a good position to be in, and certainly in a situation like this, at least you would think.
Yeah, and so again with Berkshire, another reason why I kind of looked at that rather than anything else is I was looking at Guy's portfolio, and in Tom's interview recently, he mentioned that an investor does not to invest because he's you just have most of your money in Berkshire. Like, I'm paying you to hold Berkshire. That doesn't make sense. And he explained that the way he views his portfolio overall is like there's the downside is protected, and there are some positions where there is potential, like you have a multi-bagger. So
Mm.
the way he's kind of structured his portfolio is also something that's influenced, I think, my
Well, to
capital allocation.
how does Berkshire fit in there? Because I wouldn't imagine it as like a big multi-bagger from this point. It seems like the downside's
the
relatively.
downside protection. So that gives stability, and then you've got companies like
I see.
Indian Energy Exchange.
So it's from a macro perspective on your portfolio, not each holding individually. It's that Berkshire adds some stability compared to maybe even K-Web or something like that has a little more growthy upside or something like that.
Something like that.
Yeah. Yeah. Okay. Yeah, that makes sense. That's why
Because
I still have Berkshire in my portfolio. It's a top 5 holding at this point. Top 6 holding actually. Tied with Alibaba currently.
you didn't add to Alibaba you added at 80, right? I think, or you sold puts.
No, I didn't sell puts on Alibaba, but I did add I think the first time I went to 80, and I think that was the last major addition I did. And then right now it is almost 7% of my portfolio. And I don't know if I want to go any higher than that, at least for now. Just given some of the risks with China that I am not 100% comfortable with. You're never going to be 100% comfortable with all risk, but I struggle on how to weigh some of the regulatory stuff, some of the political stuff. It's a lot of macro concerns, which maybe that's good, maybe that's bad, but and it's also a very complicated business in itself. So there's a lot to wrap your head around there too, so it's a very complicated situation there. So I don't want to get too heavily weighted into it. And I've got a good amount of exposure to a lot of emerging market ETFs in my retirement accounts. So that's going to have a lot of China weighting in there too. So if China does well, those will do well. So will Alibaba. And if it doesn't, then, well, that's the risk. So I just don't want to be overexposed.
Yeah, being in the index is never bad. So.
Yeah, and that's kind of like what you're doing with K-Web. You still will get plenty of the upside if it all goes well, and you think Alibaba would be in a good position to do well too. It seems unlikely that one will do good without the other. That's really what I'm trying to say.
Exactly, and one thing that I failed to appreciate as much is obviously there are people who are invested in the same portfolio as me. Mm-hmm. So the volatility, I might be able to handle that. I might be okay with it. But the people invested with me 10% drop and just immediately want to exit. So
those incentives aren't aligned, it sounds like.
It's not about not aligned, but you have to, it's always about, I think, getting the highest return. You have to balance out how much return are you willing to give up for a little less volatility, I think. So
fair.
That's why Berkshire.
Sure. I want it. I don't have the same sort of thing in that I'm not managing money for people, but that's got to be a burden, just like a mental burden. You seem like a pretty stoic guy, but I'm sure it sounds like you're thinking about it now. How often do you think of that actually when you're running this portfolio? Are you thinking basically how much are you thinking of your customer essentially, which is the person who would be copying your trades on eToro?
It's not zero. It's it's on my mind at some level, because obviously you feel bad, like people are investing with you with the expectation that you'll get a return, so you feel that need to deliver a little bit. So
sure.
that is definitely there.
Just whatever it's worth, just be careful, I guess. But I know you are. So that seems like the biggest challenge of managing any money. It's like a different fear. Like you just said, you're scared to lose the money if you've promised that you're trying to help them. But it's very hard to quantify. And
that's pretty much why I'm doing it. That's pretty much why I'm doing it right now. So
get used to it.
If I'm cut out for this, the numbers will tell me, and if
Fair
I'm
enough.
not, the numbers will tell me.
Yeah,
So
it's better to learn now, I suppose,
yeah.
if it's something you're interested in. Yeah.
So yeah, it's been like almost 3 years in. So this will be the third year, and then let's see.
All right.
Yeah.
Well, it's been good. A good start so far. Shall we dive into some questions real quick?
That's, yeah.
Got a few comments on SRG.
You want to start with the first one, SRG at 7?
Yeah, I think it hit. I think I saw a notification on Robinhood. I use Robinhood for all the notifications. I don't actually trade on it, but they it said it hit its 52-week low today. So it's like, oh, that's interesting. All the way back to close to 7, which is a little surprising.
Honestly, I mean, like management has been really quiet over the last month, 2 months. They said they wanted to bring the value creation, whatever, bring it forward, and realize shareholder value faster. That's what they had said in the most recent 8K. But
It actually fell below 7. It's at 694. I'm looking at it right now. I still have my my option with the $8 strike price, and it has not been exercised. It expires in January, so I wonder if I'm going to get assigned. But yeah, what a rough day. It's really a rough couple months, but it's I still feel weird about SRG, just because first off, development takes a very long time. And a lot of the proposed value is in these developments. And sure, there is value in the real estate that they do own. So maybe they do a fire sale and make out fine. But then your upside is very limited. A lot of the upside is kind of in like, oh, you get a few of these home run developments and then you're in a great spot. But those can take years. And you don't really have that many years given their debt situation. So that's what gets me worried. It's not that they can't succeed, but that's really the big reason I haven't swung, and clearly somewhat of a reason why people are selling off, not to mention the rising interest rate environment that just has real estate in general getting concerned.
Yeah, and they can't even refinance at this point at lower rates.
Yeah, so. No way. It'd be very unlikely.
Yeah,
they now have low rate debt.
Yeah, they have 7% debt, so I mean, I don't know.
It's probably pretty average for a not great credit situation.
Yeah.
Or not great.
It's funny to me, like retail investors can like borrow at 3% back when you were borrowing, but a company with like
I mean, I still can with my credit line. I can borrow it. I think my margin would be is that at 3 or 3? Might be 3.
It's like 2%, right?
It was, but now it's gone up. I think that one follows Fed funds, so that should be close to 3 now. I haven't checked in a while. I will soon when I buy a house. But but then I also have my HELOC, my home equity line of credit, and that is at 3% now, and that was at 2.25%, and that is fixed to the prime rate -1. So that's what that's tied to. I think that's what it was.
Yeah.
So that has a ways to go before it gets up there.
It's half of what's
but it is variable. It is variable. So keep that in mind.
Fair, even if it's variable, like it's still less than 7.
yeah, for sure. I don't think you'd be able to get something like that now. A lot of HELOC openings have been slowed, so it might be very hard to get that. I opened that back in. That would have been 20. I think was that 2019. I think it was. Yeah, it was pre-pandemic. So it was 2019 that I opened that up, and I think it'd be very difficult now. Though, yeah, maybe you could find a decent HELOC deal, but it is pretty wild to think about. So I'm not personally adding. I mean, eventually, I guess if it gets low enough and they're not like an imminent bankruptcy, then sure. But I know they have that weird litigation risk that I really haven't looked too much into. But there's some weird tie-in to this ongoing Sears litigation where it sounds like they might unwind something and take some of the real estate back or something. I don't know how that exactly works, but it's something like that. Basically, SRG unfairly profited from the sale or that sort of thing, or from the spinoff.
So the basic idea was that they kind of stole off Seritage at $35 per share, and if that were true, it would be higher than $35 per share today. But it's sitting at 6. So if they had unfairly, taken away that value,
True.
it would have been a lot higher.
Yeah.
So
A little
in
bit
a
of
way,
market
it's
timing in there,
clever.
but yeah. I don't know
Yeah.
how
No,
to
but
I
it's
don't know how to
never
weigh
crossed.
that risk. It does seem to be a risk, but I don't know how to weigh it partly because I just haven't done a lot of deep dive into it because I'm not particularly interested in Seritage, but it's a new one that I hadn't been thinking about before, so it doesn't make the situation better. But are you interested at all, like getting to these prices, or it sounds like
It's
you're
already
focusing?
a full position for me, so I don't think I'd add to it. I think my cost base is like around $10 per share, so
Sure.
10.7 or something.
And it sounds like you're still anticipating some sort of buyout.
So what I think would happen would be a partial sale of assets, and they would like retain probably like less than 10 of the properties,
That's a fair take.
and I
I
think
wonder
that's
who'd
what.
buy if they didn't get the premier properties. That's what people would want to buy.
Yeah, yeah. I think the out parcels, I mean, that's how they've kind of been selling them off, like out parcels and then sell off the main block of land. But yeah, I mean, with real estate, I think whatever is priced in the market, it might be very different to what the value would be to a private buyer. So,
Sure,
so let's see how that
maybe.
goes.
No, I don't know. It'd be tough to sell without selling a few of the crown jewels, the alleged crown jewels. Selling the renderings of the soon to be
We should get a ruling this month, or I think by next month.
Yeah,
So,
that's what they always say. Then you get a 30-day
yeah.
extension and you keep going.
But the judge who's like presiding over the case, he's retiring, I think, in July. So
That's I don't know if that's good or bad. I'm not too sure. Depends on
yeah,
the
if he
judge.
retires without making a judgment, then it like drags on the case
Yep.
a lot longer because it will take time to get a new judge up to speed with what's happening, and yeah.
Frankly, a lot of the work in litigation like this, a lot of it really is done by clerks and researchers, and then they kind of present it to the judge anyways. So I don't think that would be as much of a problem. It would just be
Yeah.
more like moving it and assigning it and all the bureaucracy associated with that. I don't think it would so much be bringing people up to speed. Though I'm not sure how the mechanics of this judge's chambers worked, but typically they got a lot of clerks helping them out, and they're doing a lot of the fine research, and then those clerks would probably move into whoever the new judge is. Most likely, I don't know for sure, but probably be something like that.
There's definitely, I mean, someone is benefiting from it being at a low price. Someone probably being Eddie Lampert. So that's always been the biggest risk, I think, with Seritage. Even bigger than the litigation, it's like, what's Eddie Lampert going to do? That's a big question mark. Yeah. So yeah, Seritage. If someone else is losing money, let us know.
That seems like there aren't too many people who have made money at this point, unless you got in real early, like back in early 2020.
Even then, I think you'd be pretty much at break even at this point.
Didn't it? I thought it got close to 5.
Six was the lowest.
Yeah, so I guess you're getting pretty close.
6.49. Yeah.
Yeah, 50 cents off. Crazy.
Has anyone looked at their own portfolio before adding to new positions? Have you added to anything recently?
Not a whole lot because I've been gearing up for my house purchase, which will be in the next 2 months probably. I think the most I've added to was, I think Facebook was the most recent ad. That was like a month ago. And I'd probably be looking to add to that again, maybe next payday or something. But again, I got to kind of be careful right now with not having enough cash. But then again, I could leverage my portfolio, but I don't want to get too cute with that. No need to do that if I don't have to, but it's an option.
Yeah. Is there any reason you're adding to Facebook instead of, say, Google or Amazon or?
I think Google's great, but I struggle actually with Amazon too. They're both great, but I struggle with valuation there because you're still factoring in a lot of growth, and maybe they hit it, they've been growing like at insane levels for a while, and maybe they get a few more years of that, or maybe they don't, and that's what I'd be concerned about. And that 25-30% growth is not guaranteed. Again, they could hit it, but I don't want to pretend like that's guaranteed, and I'd rather have more conservative growth estimates, especially right now with ad rates going down in the near term, and who knows where that goes. But if you already have these kind of headwinds right now, how likely is a 30% growth rate for the next few years? Which time value money says you really want a lot of that growth coming now, to your interest rate point earlier. So that's what's kind of steered me away, though. I mean, it gets more interesting by the day as they get cheaper and cheaper. That's the main reason. Facebook was kind of first to get hammered down in its free cash flow yield and all that, and it doesn't really need a ton of growth comparatively, at least I would think. But it does have a big target on its back compared to its tech brethren.
The way I see it is like Facebook, they are investing into Meta. I mean, metaverse, but Google, they've just been like kind of buying back shares. That's what I've noticed. Like that's been a huge place where all
Facebook's doing it too.
They are, but then I think like over the long term, they're going to be investing a lot more in the whole metaverse theme as opposed to returning money to shareholders.
I don't factor that much into the metaverse stuff that much into my my valuation there. I'm trying to get it at a price to where that's more of a quote unquote free lottery ticket. And that I don't need the metaverse to go well. However, I don't want Facebook to be spending all of their free cash flow for the next 10 years on a project that will fail, but I don't think they would do that. Again, we'll see what Zuckerberg does, but I think they might burn cash for a few years, and if it really isn't working, how much money could you possibly throw at something for it to not work? You're either going to quit at some point or it'll work at some level. So it should be one or the other. I don't think they're going to be that insane to spend all of their free cash flow for the next 10 years. But if they spend a fraction of it, even like a quarter of it, yeah, that would suck if it didn't get anything out of it. But you got to take risks at some point if you're trying to grow, especially at this level. When you're already at however many billions of users, there's only so many more you can get. So you got to kind of find new ways. So it makes sense they're going to be spending a significant portion of their cash flow going forward.
Yeah. They haven't even monetized like WhatsApp as much. So I
don't know how they would monetize it, frankly, for WhatsApp.
So it's used as a payment system gateway in a lot of countries, which is
okay. So you take a percentage on payments or something.
Yeah, so like WhatsApp Pay is a new thing.
Okay, fair. They tried that with Messenger though, and it didn't seem to work. So I don't know why it would work with WhatsApp. Maybe it will. I remember when they rolled that out with Messenger, like I could pay people. I don't know anyone who used it. I've never used it, and I don't think it really caught on that well. Though who knows? Different audience.
Yeah, but I mean, I've heard that it's a thing, and some people do use it. But
right.
They've got a lot of avenues for growth. That's the basic. Like even if the number of users don't grow, the revenue per user could grow.
Say again, even if they what?
Even if like the number of users don't grow, the average revenue per user could significantly grow.
Yeah, well, that would be the path, because again, you can't get how many more users could you possibly get? At least in the Facebook, Instagram realm. I actually think where their next growth avenue will probably be some sort of acquisition that we're not even thinking about right now. If it can get through antitrust, of course. But I don't know if it'll be in-house. It could be something sort of like an Instagram, probably not that much of a home run, but something like that, buying a more mature kind of platform that already has a good amount of stuff going on that's different enough from their current ecosystem. That's I think a pretty likely thing to happen, but yeah, we'll see. It very much depends on the whole environment and what's out there, and also what the government says, because that's increasingly a problem for them given their size.
Yeah, I feel like they would likely have to spin off more than acquire things if the government does get involved.
Yeah. Spin off Instagram as its own stock, but that's kind of in the same ad ecosystem as Facebook.
Yeah, that's to spin off Instagram and WhatsApp eventually. like break up Facebook.
I feel like if they would have, I think they wouldn't. I don't know if they'd spin off any of the kind of ads platform stuff, but maybe if the something like in the metaverse takes off, that could kind of be its own company, like
I'm
Reality
not saying by
Labs.
choice, like if regulators like clamp down on them.
Yeah,
That
I do find it kind of hilarious how they're just constantly harassed by the government. Yet you have Google here just kind of sitting in the corner, like, yep, doing almost all the same exact thing, but raking in cash and without nearly the same scrutiny, at least publicly facing. Facebook, maybe because of Zuckerberg, I don't know, but they just get attacked all the time.
I
Sometimes
think they just enjoy
justifiably, but
testifying. Yeah,
yeah, but yeah,
I
that's
think
where
they just enjoy
Google
having.
and Apple have done well to kind of get some of their. They have like, all right, you're the congressional hearing guy. It's not the CEO anymore, or at least as much as they can help it, and that seems to have helped. Whereas Zuckerberg still is kind of handling everything, which, for better or for worse.
I think there are some structural changes at Facebook, and I don't know. I'm not as optimistic about Facebook, but who knows? At least the core business could do really well. Yeah.
Luis suspects that Google's probably spending more on lobbying. I know they're both up there, so let's take a look. Biggest lobby groups. Say again?
You can check that.
Oh yeah, it's all public. Amazon is huge. U.S. Association of Realtors is also huge. I think they're one of the top 5 biggest lobby groups, realtors. All right, let's see. Top spenders according to Open Secrets. Oh yeah, Facebook is Facebook tries. Here's top lobby groups according to Open Secrets. There's Meta. They're actually the biggest company, just ahead of Amazon, barely. The rest are, well, I guess Blue Cross Blue Shield is insurance, so they're a company as well. The rest are kind of more trade groups. But yeah, Blue Cross Blue Shield, pretty easily the biggest one, followed by Facebook, Amazon, GM, which already received a massive bailout from the government a little over a decade ago. And looking for Amazon, or not Amazon, looking for Google. I thought they were up here. Maybe not. They're not on the first page, but I know they're up here. A lot of these do have significant, like Northrop Grumman, significant government contracts. I'm a little surprised Microsoft isn't up here, but yeah. Anyways, Facebook is spending plenty, so
I didn't know you could check that.
yeah, a lot of this stuff's public. You can see what individuals give. If for example, if I donated to a political candidate, you could look it up and see it, which is kind of nuts. If your boss did, if your teacher did, you can look up it. People can kind of out themselves politically without realizing it when you make a donation to something, or in the case of lobbying, a donation in quotes. A lot of money in politics. Let's get a few more questions,
Another
maybe.
question? Yeah.
I'm going back up towards the top. Matt, would you rather challenge Bill Ackman to a tennis match or Buffett to a bridge game? I've never played tennis, so probably the bridge game. Then again, I've never played bridge, so I don't know.
I feel like Ackman would be the bridge.
Yeah, I've heard Ackman's quite great at tennis, so I'll give him the benefit of the doubt that he's probably going to beat most people.
Tennis, like that would be.
Yeah, I'll face a 90-something-year-old in tennis. How am I going to be?
Are you tracking Rob Vinal? Is he an investor that you're?
No, I did.
Really.
I have started to watch some of his interviews, though, like some of his older stuff, just to kind of get some of his frameworks, but not following him religiously by any means yet. Maybe I will. Who knows? I can't say I really follow any particular investors that closely. Not that I'll thankfully take ideas all the time, but it's not like, oh, this investor invested this, therefore I do. Outside, I guess, of Pershing Square, because I am invested in Pershing Square Holdings, but I'm not like copying Eckman and the rest of my portfolio or something. Are you?
Rob Vinal? No, not really.
Are there any in particular that you're like try to follow really closely?
I do like to follow Michael Burry. It's just interesting because he's
It's a
like the only
wild
one who
ride.
goes up. Yeah, it's interesting, and like he goes into things that kind of make you think. And
Hey, I guess he led you to your biggest winner, right? Or
yeah, he was in it,
a little GME inspiration.
and probably the next biggest winner also.
Oh, which one's that?
Discovery. I mean, Warner
Oh,
Brothers.
that's a Birdie
Stepping
one.
in. He just started. Like I saw it in last quarter filing.
Hmm.
He's in it, which is great to see. Yeah.
I wonder if he's doing some sort of weird thing, like some options play, or where he's long in one side and short on another or something. I wonder. But that's always one thing you got to keep in mind with him. He's so weird.
No, but like I mean, the companies he looks at, they always have something going on. So it's like a
Mhm.
special situation sort of
Yeah.
thing. So always interesting.
Yeah. Jason asks, "Am I buying a car on Carvana?" I think it's actually pretty likely. We'll see. I'll keep you posted there. That wouldn't be
Did you
until
get the
probably.
Corvette? The call to renting?
Hey,
Or
that's a surprise. That's a surprise.
Oh, shit.
I did not buy a Corvette, but I did do
Yes.
something with a Corvette, and I'll be revealing on the channel soon. But I will be buying a car, probably, almost certainly, before September would probably be it. And I'll let you know if I use Carvana because it's definitely up there. You know what's surprising? You can ship a car in the U.S. for like $600 or $700, which just seems really cheap to me. Like that you can ship something from say Florida to Texas or wherever, for that little, for how big the item is. I just think that's kind of cool. That's apparently something that's offered. Carvana does it, but also others. I don't know if they do their own delivery or if it's outsourced.
I didn't know that. That's cool.
Another one from Jason. Karan, do you know about Paramount's real estate? I think it's worth $6 billion or more.
I don't know about Paramount's real estate.
We'll move on.
I didn't know that. Yeah.
That's always one thing that I think is kind of overlooked with a lot of stocks is their real estate. If they happen to own the land that they're manufacturing from, or that if they have restaurants, the restaurants themselves, there's going to be a ton of value in there. And and it's not as though the company has to sell, or it's not as though the company has to liquidate to realize that value. They can leverage it. They can do something like a sale leaseback where you sell the land and then lease it right back to yourself, so you get that cash out. So that can be a huge amount of value potential for a lot of companies, and it's kind of hard to figure out sometimes because it's usually not itemized, at least clearly. It's usually like book value or something. Yeah. But it's always like, oh, look at this little lottery ticket, that sort of thing, or oh, look at all this like cash, if you want to call it that, that they could tap into.
Yeah. No, with Paramount, I haven't really looked into that, so no idea. Any other questions that seem interesting?
Yeah, let's get a couple more.
I think there was something about process that Jason mentioned. Either he's bought more process or.
Was it towards the top? No, sorry, I'm pretty high up there. Will says something about we're talking a lot about Google and Facebook. Advertising seems like a fickle business. Otherwise, it'd be in Facebook. Is it? How would it compare to another business?
They don't have a monopoly there with
Say
Google
again.
and Facebook. Google and Facebook pretty much have a monopoly in the ad space, right? Like
I wouldn't say that. They have a serious advantage, but I would not say it's a monopoly.
I mean, yeah, but basically, like two of the large players control majority of the market. Like,
yeah. Well, I think they could basically be granted a monopoly if a lot of these privacy laws are bolstered, or if something like all the service providers like Apple decide to not allow tracking so that new companies can't collect data. I think that would be the way that Facebook and Google could effectively get monopolies if no one else can actually collect data and they kind of have it all already, because they have years of data. And that would give them a huge, they already have that as an advantage now. But at least now, you theoretically, if you're willing to spend enough money, you can go in and try and collect a lot of data or even buy it off of these companies, subject to privacy laws. But if those privacy laws get more and more intense, it's going to be way harder to break into the space. And then I think they'd be more effectively monopolies. So it might hurt on the one hand, but it also would kind of protect them. At least that's how
crush
I
the small competitors.
Yeah, right. Exactly. Unintended consequences of regulation. That's a common thing. Though it is definitely a pretty cyclical business, depending on how the ads are done. But yeah, if business activity is down, advertising is going to be down. So it's a risk that comes with it for sure. It doesn't seem to be recession proof by any means.
I don't get why Jason's in the chat, but not with us here.
I was told he was not available. That's all I was told.
Yeah.
But he's always a strong supporter, so that's all we can ask for. How do you weigh this? Sandy brings up Amazon's advertisement being bigger than YouTube advertisement. How do you weigh that for Amazon? I know people talk about Amazon as an ads platform because they have their own ads system for sellers on the platform, but it's like it's very internal. I don't know how to weigh that, because it almost just feels like a toll that sellers have to pay, and I just don't know how strong it is, like how secure that revenue stream is.
I don't think it's a second that they.
Yeah, it's not huge. It's not huge, but people
like advertisement is YouTube's bread and butter. Like that's not the same for Amazon. So
right, that's a good point.
Yeah. The fact that it's bigger than, I mean, does he have numbers to back that up? Because what is he looking at exactly?
And it is kind of a apples to oranges comparison too. If you're comparing Amazon advertisement to all of like Google AdSense, that's going to be very different than just comparing to YouTube. Is how much traffic does YouTube get compared to Amazon? I'd imagine Amazon gets quite a bit more. Though I would imagine your time on YouTube, the time per sitting is going to be higher on YouTube, but you're going to have less overall traffic. Whereas Amazon, you're going to have a lot more short-term traffic, I'd imagine. But I don't know. That's probably proprietary. They're not letting everyone know how long they're staying on each page.
Yeah.
Yeah. Here's one from Matt. Where would you first cut your expenses if inflation starts hitting your pocketbook? Or I guess more generally, what would you first cut if you had to tighten for whatever reason?
Did you see that Bloomberg article? Like, don't eat meat yet.
Yeah, I did a whole video on it on April 1st.
Where did I watch the video?
the lentil
with
one,
the Chad, right?
Yeah, with all the Chad memes. I watched that like a week ago. I don't like to. I mean, I'll occasionally laugh at my own jokes, but that's when I go back to, because the article is just so ridiculous. It's just more laughing at Bloomberg.
If you're making less than 250K, just give up at this point.
Yeah. God, what a tone deaf article. My goodness. But anyways, to the question, what would you cut, if anything?
I'd cut my Forbes subscription. That's the first thing I'd start with.
Fair. Yeah, let's see what subscriptions. I think it wouldn't be so much cutting expenses, but I would probably rent a room if it really came down to it. I like to have that option there, have some extra rooms so I could house hack. So rather than say, buying a one bedroom place just because it's cheaper and then my monthly payment would be lower. I'd rather buy something that's 2 or 3 bedrooms. We can enjoy it in the meantime, but if it came down to it, I know I could rent out a bedroom or two in sort of an emergency and create a lot of income that way. And it would be disproportionately more income than the extra payment that would be to buy that sort of place, at least in most cases. That's how I kind of view it. I just want to have those options available to create new income. And of course, yeah, if I really had to tighten something, you could always find something to cut.
Yeah, less driving, more Zoom meetings. I think that helps.
Yeah, sure.
Less fuel costs. It's expensive. Super expensive.
I was just in Houston this weekend, and gas was a full like $2 cheaper per gallon than in Chicago. First off, Houston's an oil city, but also way less in Chicago. You have all your city taxes. Illinois has its own taxes. Texas has its own taxes too, but they're a lot lower. So I just thought that was kind of hilarious. Saving a good $10 a tank, $20 a tank, depending on what's going on.
Insane. Yeah, fuel costs. I mean, it's hitting every business, no matter where you are. You need transport. Yeah,
energy is everything, and not just transporting, but power. Yeah, but certainly fuel as well. Any plastic components too. Anything where petroleum is involved at all, like which is really seriously everything, because you need energy to create things, to move things, for people to function. So. Yeah, it affects everything. Which is why it's really concerning when stuff rises seemingly out of control like this, because a lot of people really just don't have room to give. Businesses as well. So,
absolutely,
political response typically comes after that, and maybe exacerbates the problem, maybe doesn't.
There was something right yesterday where Biden kind of mentioned that inflation is at moderate levels or something.
Yeah,
it was like 8.6%. He's like, that's moderate.
and that's a 8.6% is conservative. Like if you really look at real numbers, probably quite a bit higher than that. But that's by their own numbers, and it's just posturing. Any politician would do it. Well, what are fuel costs like in the UAE? They gotta be real low. You got all that oil money.
I mean, it's doubled since where it was like probably 3 years ago, 2-3 years back.
Yeah, it's about the same for the US.
So
maybe not quite a double from 3 years ago, but certainly from the depths when we had negative oil for a little while. I think it has definitely doubled since then, if I can recall. But yeah.
Earlier it was subsidized, so like pre-2017, so we had like oil cost subsidized, but then at some point they've kind of like removed that, and it's at the market rate now. So it just has been going up. It's up like 2.3 times compared to what it was.
Wow.
Back when it was subsidized. Yeah.
I see Manu asks, what's the background from Stonks?
I had to kind of move from like a V8 to a V4.
You had to move from what?
Like a V8 to a V4. So like half the engine size,
yeah. That'll save you some cash.
Yeah. I'm thinking of going to a scooter next, like if it goes up like more.
Yeah, just go full electric.
Yeah, just get a bike, a cycle.
Yeah, it gets real hot there, doesn't it? that would be pretty intense. Yeah. You might pass out. Maybe the last question.
Yeah, sure.
I guess Will says, researching any interesting companies lately besides dumping, purging?
No, I'm pretty much just like looking at my own portfolio and just kind of adding to that. Like I bought more of Discovery day before, and I bought more Discovery yesterday. Just kind of adding to that. That's pretty much it.
That's the luxury of a portfolio being in the red, is like, oh, let's revisit some of these, and they're often cheaper than where you bought it in the first place.
The luxury.
Okay. Yeah, right. The single luxury of Your net worth getting destroyed. Yeah, I can't say I'm looking at anything new, at least in any detail. Top of my list is Floor and Decor from when Jason was talking about a few weeks ago. That seems like a very interesting one, at least for me with my real estate bias. I'd definitely be interested in that, even though retail is a dirty word nowadays. It's worth. I think it's worth taking a look. But yeah, what was one I looked at? I forget what it was, but yeah, probably Floor and Decor would be of my non-current holdings would be one. I was looking a little bit at Google recently just to see where the free cash flow yield was getting to, and how much growth you'd have to factor in. But otherwise, yeah, same with me, just existing holdings.
I was looking at Bosch Holdings, Bosch Health also. But
Oh yeah, you'd mentioned that.
I've passed on it because, like after Twitter, like I really look at management, and that's been a big like factor which is like preventing me. Although the value is there, you're not going to get their spin-off company, which is at a higher market cap than the existing parent company at some point. So you're basically getting compensated for whatever you've paid. You're getting there, but I feel like there's a lot that could go wrong because management wants it to go wrong. So yeah, staying away from that. But the value,
say again.
But the value is there. Like there's definitely a substantial amount of value.
How'd you come across that one?
I saw it on the podcast with William Green.
Right.
You were talking about it.
That's right.
Yeah. So we've had like Bill Miller buy into it, like when it was in the 20s, like 6 months ago. It's like, I think it's $7 or $8 per share, something like that.
Yeah. Matt mentions Sleep Number. Matt mentioned Sleep Number as well. I did add a little bit to that this last month because I think they got crushed again. On that's the theme. Just any stock that has earnings recently just gets crushed. doesn't matter what company it is. It seems that's a weird one because they have a massive order backlog, but I kind of see it as the mattress equivalent of Thor, like Tom's favorite Thor Industries.
That's what I was thinking. Yeah,
because it has a huge backlog, horrible supply chain problems right now. Seemingly a very good product. I enjoyed a Sleep Number bed at a hotel recently. I'm like, this is actually kind of cool. I think when we move, I might go ahead and just take the plunge into a Sleep Number bed for my wife and I. And yeah, but it is very similar to Thor in just kind of the basic, like big backlog, fairly substantial kind of investment product for a customer, and that like you're not buying one of these every year. And it'll be interesting to see how they get through the next few years and how much of that order backlog stays, of course.
I haven't looked into Sleep Number, but cool.
Well said. Cool. Should we wrap it up there, Karan? Any final thoughts?
Do you want to talk about Tesla doing the whole share split?
Oh yeah, I saw that today. Tesla, all that value creation, creating all those new shares.
Do you see where the stock price ended yesterday?
No.
Check out the chart. Check out the chart. Look at the price.
No. What? Come on. No. That's not real. After hours, it's up. That had to be manufactured. There's just no way.
696.6.
Oh my god! What? That
and
is
then
a great spot to end.
Ways. Yeah.
That is a great spot to end. Oh man! All right. With that said, before Tesla does their stock split, well, if they split it by no. They'd have to split it by 10 to keep the ratio, right? They're doing like a 3-to-1 stock split. Anyways, like, comment, subscribe. Discount links in the description below. Got our Discord down there as well if you're not in the Discord already. Yeah, with that said, until next time, everyone.